And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. We did have another bumpy period last week, however, slightly positive. So we are going to get into that, see where we closed for the week. Take a look at that rotation that's continuing to shape up, a lot of bottom fishing taking place. And then also being aware of some of the news that drove price action last week. And we did have the Federal Reserve FOMC meeting on Wednesday. No surprise, they kept interest rates the same. However, they did announce anticipating a 0.5% decline overall, so 2 potential rate cuts into year end. Some of Powell's comments were received bullishly because there is a sense that the economy is still expanding and no fear for recessions at this point in time. Also, we did see retail sales numbers came in. They rose very slightly. However, there was a rather obscure data point in that retail sales number that came in very positively, and that is called the control group data, and that is used as an indication of future growth in that retail sales. It's a number that the Federal Reserve watches closely, and it did jump by 1%. That did help some of these retailers, give them a boost. We'll take a look at that. And then also industrial production. It actually jumped in February, led by manufacturing, and that gave industrials a boost as well. Now, news-wise, we did see the tensions in the Middle East continue to increase. That pushed gold stocks higher. And then also we did see the volatility index begin to decline. We will take a look at all of this. Let's go ahead and take a look at that S&P 500 to see how did we close for the week. And here we are, a daily price chart of the S&P 500. And you can see a lot of choppiness, but generally back and fill. The S&P did end slightly positive. Good news there. Now, let's take a look at some of these momentum indicators on this daily price chart. And what I am sharing with you is that the RSI is still negative, and we can see that the momentum has shifted to more of a sideways price action. At the very least, we are not heading south at this point. Also, we do have this MACD black line poised to cross up through that red. And historically, if we get a defined move there, you can see that it can, in fact, signal a new uptrend. And I have a system that I follow using Bill O'Neill's follow through day, and we are not yet in positive territory yet, but we are certainly firming up. Let's go ahead and take a look at the tech-heavy Nasdaq, and you can see very similar back and fill price action, likewise with that MACD black line up through the red. RSI heading somewhat positively, not quite as flat as the Nasdaq, and we are seeing some of those former AI leaders coming back into not quite favor yet, but they are seeing buying. We'll get into some of those names as well. So let's go ahead and take a look at the underlying 11 sectors in the S&P 500, and this is a 2-month daily price chart view, and it's sorted by relative strength, that RSI, and then sorted in descending order. In this upper left quartile are going to be your relatively stronger sectors, and then down on this right quartile, your weaker areas. So let's take a look. Energy up again this week, and this is XLE, that energy ETF. We're going to take a look at the price of oil, which has been going up a bit. Also, I will share with you one area in this energy space that is faring better than the others, and share with you a couple of stocks in that group. But let's go ahead and take a look at some of these other relative outperformers. Utilities, now they were not an outperformer percentage-wise this week, but they are still holding up quite well, up above this 21-day simple moving average. Not a whole lot of momentum, but if you own some utilities, nice high-yielding names, you can stay with it. The group is acting well. Healthcare up here, and it did outperform last week. However, finding resistance at this upward trending 21-day simple moving average, net flat, but you can see healthcare and utilities, these defensive areas remaining up here at the forefront. Financials were up almost 2% last week. We did see movement in bank stocks, but there's another area in this financial sector that is faring well, and that would be insurance stocks. They're continuing to come under accumulation. And talking about the industrial production data, you can see that we did have a bit of a move here. The group did outperform the broader markets. However, we pulled back going into today's close. But let's take a look at this black line up through the red for the XLI. We're not quite bullish yet with that RSI, but there are some interesting names that are beginning to percolate. And as we move through, taking a look at some of these underperformers, discretionary still down and out. The group was hit this week by continued deterioration in Tesla and then other retailers. But let's take a look, because in this period last week, we are seeing sideways price action. We are poised to have that black line up through the red on the discretionary group, and we are emerging from an oversold position on that RSI, which is down below 30. So I am beginning to bolster my watch list with some of these discretionary names that have the growth numbers and are looking rather constructive. Also taking a look here at staples, that is another area. It was flat this week, had a tumble last week on news as far as the meeting with Trump among several large staples companies. I talked about that in my report last week. And you can see that we are stabilizing this week, but not in a positive way. And you can see also that we did initially have quite a move into the staples stocks, but since then they are suffering, or at least faltering a bit here going into the end of March. So from here, I do want to take us down a little further, drill down, take a look at these ETFs that are very useful as far as keeping you on top of not just that sector strength, but even more refined with these industry groups. Again, that RSI, relative strength indicator, descending order. Now, volatility is up here at the forefront, having a lot to do with the advance going into the beginning of March. But take a look, we are seeing it lower down here at 19. Now it is still elevated. Anything above 16, indicates that we do have still a bit of fear lingering in the markets, but it is of note that it is receding. And then also up here at the forefront, surprisingly, is IBB. This is the biotech ETF, not a great looking chart, but I will share with you a name among others that are looking quite good. It is a biotech name that actually has a yield. Also up here at the forefront, IGV. This is of note. It is the software ETF, and you can see how it really fell out of bed here, but we are seeing stabilization, very similar to the broader markets. This is a growth area that will get hit if any signs of a economic slowdown. It's one of the first areas that corporations tend to pull back with their spending. But again, we're seeing that firming up, black line up through the red with that MACD, and we are emerging from an oversold position. This is another area that I am building out that watch list so that when it turns bullish, because you can see just how the group, I'm taking us back, can really advance once the markets get stabilized, and if we do see some nice earnings from the Q1 results. Taking a look here, semiconductors still quite negative. You can see that we are very generally in a downtrend. NVIDIA had a tough week last week. It was down about 4%, and everything to do with their conference last week and their announcements were not overly stimulating. Not anything entirely unexpected was announced, and we did see other semiconductor stocks falter as well. Let's take a look at the yield on that 10-year, and you can see that we are just kind of bouncing around here. That 4.25, I believe that's where we closed last week. So not big changes there, which is fine because it can be highly impactful if we see those interest rates move. And also taking a look at some of this group movement last week. Let's take a look at XRT. It's not overly exciting. This is the S&P retail ETF, but we are in the potentially beginning stages. You can see that we are having that black line up through the red. And again, just similar to the discretionary sector, we are coming out of an oversold position with that RSI. So keeping that in mind, again, another area that when it gets going, it can be very rewarding, certainly if you're in the correct names, of course. So also from here, I'm going to share with you a third view of the markets. And this is a combination of the sectors, industry groups, and the M7 names. And what I wanted to highlight here, it will be an overall view of what we've already looked at, but there are some metrics that were not included. First up, I talked about the price of oil inching higher. We're at about $72 per barrel, which is well above the threshold for these oil companies to retain a profit. So that is certainly one item of note with oil. And then also, as we move through, taking a look at how those M7 names fit into this mold. Now, I do have Netflix up here. It is not an M7, but it's certainly a high weighting in the Nasdaq. And we can see that the stock advanced quite nicely last week. It was up about 4%, black line up through the red, and it is viewed as another area in the markets at this point in time. These media companies, also gaming related stocks, are outperforming the broader markets and are really faring quite well despite potential of a slowdown, whether in the economy or otherwise. So let's go ahead and move through because I did want to share with you on the M7 front, we have Apple, Meta, Tesla, Alphabet, and Amazon. And so we have these 5 names down here in that lower quartile. They are very much underperforming the broader markets. Let's take a quick look at Amazon. You can see this gap down taking place upon earnings. The company has seen a slowdown in their cloud computing. And then, of course, they have a huge retail presence, and that retail space is under selling pressure, stabilizing a bit here. So again, keeping your eye on these big cap mega names when institutions decide to get back into the markets. Oftentimes, these bigger names are the easiest entry point. Alphabet really struggling. Again, earnings related decline and not looking quite as vibrant, but this kind of view where you're really drilling down, taking a look not just at the sectors or the industries, but really all of it together to really refine your view as it relates to areas that are outperforming, all about taking shape as far as turnarounds and then your ability to participate in that. Now, one other area I did want to highlight that is outperforming is these companies that are in foreign countries. And last week, we did see money flows into India. This is INDA, that MSCI India ETF. And you can see that we are experience a downtrend reversal here, and a lot of it is being attributed to money that is leaving US markets, for instance, and going into India. From here, let's go ahead and take a look at a couple of names that are larger market cap and have been faring quite well. First up here is HDFC Bank, and you can see we are a bit extended to say the least, but it's had a very healthy week last week. We can also take a look at IBN. This is another bank stock, and also you can see these gaps up, just an awful lot of volume, lots of buying taking shape there. Also, we can take a look at another ETF, INQQ, and that's the India Internet Fund. And again, you can see we've had this sharp advance. You're not terribly early, but definitely on the lookout for a potential period of consolidation. And we'll take a look and see if this area continues to find vibrancy. Another ETF, this is First Trust India, their Nifty 50. It's an equal weighted fund, and it does look quite constructive. It had that nice move back up above that 50-day simple moving average on Wednesday. Nice high volume characteristics, MACD, RSI, both in positive territory. Also, UK stocks still faring well, a name that may not be very well known. It is RELY, beginning to downtrend reverse out of this area of being oversold. And it is a publishing company, but it is certainly notable as far as looking at stocks outside of the US. Now, also from here, I did want to share with you some of the AI related names that are really perking up here. This is Palantir, PLTR. I'm sure you're well aware of this name, big winner. It was a big winner for us on my MEM Edge report. However, as we deteriorated, I did remove it, but it is still on the hold list. Really firming up quite nicely. Friday today, it closed up above this 50-day simple moving average, bullish RSI, and a bullish MACD crossover. I'm going to share with you an ETF. It's not anything I would highly recommend, but I was surprised that it was out there. PTIR, and this is an ETF that provides you with 2 times the daily performance of a given stock. So in this case, we're looking at Palantir, and you can see now it does have that volatility. You're going to have that downside risk as well. And then another name that is shaping up quite nicely, Uber. You can see that we are in the throes of regaining that uptrend and that black line up through the red with a positive RSI. And yes, there is an ETF for this name where you can, for those of you that are adept at trading and have a strong stomach, this is that 2 times Uber ETF, daily ETF. So it was up 4% today, where Uber was up about 2%. And then we can take a look at a couple of other, I talked about financials and a lot of these insurance stocks that are really sitting up here quite nicely. This is Allstate, experienced a nice base breakout, back and fill in line with the markets this week, but in a nice confirmed uptrend. Another area in the financial space is the financial specialty area. These are companies that provide the ability to trade, whether it's commodities or futures. This is CME Group, nice uptrend continuing to trend higher. Another name that we can take a look at, VIRT, they provide quotes for buying and selling securities, and we can see it did move back above this 50-day simple moving average, positive RSI, and MACD. One other name here in that space is the Intercontinental Exchange Group, ICE, had a nice base breakout last week, and we are still retaining that uptrend with that black line up through the red on that MACD crossover. And one other name that we can take a look at that recorded earnings a couple of weeks ago and is sitting up here really bullishly. When you look at a stock such as OKTA, they are a software security name relative to the broader markets. These are the names that are going to make it to the front of my watch list as well. Those stocks that are withstanding and actually standing against the downtrend taking place elsewhere, oftentimes will go on to be your leadership names once those market pressures subside. An exercise that we did last week, looking at an intraday chart. Again, for those that are adept or inclined to look at intraday charts for shorter term trading. And first up, we're going to take a look at LUV. And for those of you that follow the markets closely, you'll know that they did announce that they are now going to be charging for luggage, which has a lot of people upset. But you can see investors see the area where their profit margins will be improved, and a nice uptrend has escalated and taken shape here. But let's go ahead into that intraday, and we're going to look at a 1-hour chart for LUV, Southwest Airlines. And what I wanted to highlight here is you can see I use a 5 and a 13-hour chart, and just quickly marking this up sharing with you a couple of characteristics that would keep you in the stock had you participated in this gap up. Quite simply, it did remain above these moving averages. The MACD did enter into positive territory above that net neutral, and it remained up here in positive territory, and likewise with that RSI. Now, we are overbought at this point in time, but this is a 2-week move, almost 2 weeks, and you can see the nice sharp advance. So from here, comparing that to Tesla, which had a good day today, there was certainly an analyst came out talking highly about the prospects for the stock, but take a look at the difference relative to LUV. This is a 1-hour chart on Tesla, and you can see that we are above the 5 and 13 hour, and we do have a bullish MACD and RSI, but you can see that we've had these periods in the past where it has been able to develop those positive characteristics, but has faltered. Now, the key difference at this point in time with Tesla is that the MACD is in positive territory. So that is good news. We could continue to see a rally, but you are going to want to keep your eye on those moving averages and those momentum indicators. And one last area, I mentioned the energy group really at the forefront over the last couple of weeks. From here, we're going to take a look at some of these natural gas stocks, and they were certainly the top performers last week in the group. And first up here is Williams Company, WMB. And taking a look closer, we're going to look for a full quote. And this particular view will also provide us with the yield for that particular stock. And it is sitting here at about 3.2%. We are in the throes of a potential base breakout, positive RSI and MACD. Another name is KMI, and this is Kinder Morgan. A little earlier in its potential downtrend reversal, it did close back above this 50-day simple moving average, positive RSI and MACD, and the yield on this particular name is 4.1%. So you are also experiencing a nice yield in addition to that potential downtrend reversal, which is shaping up. And last up here is LNG, and it is an E&P, but it is also involved in natural gas, which is being touted as a great resource, certainly for AI-related activity. You can see with this particular name, we're back up above that 50-day simple moving average, positive RSI and MACD. So as mentioned, we are seeing the markets begin to firm up. We will need to see more evidence before turning bullish. Also keep that watch list vibrant. And as always, use that link below to trial my twice weekly MEM Edge report. It dives deeper into these sectors and areas that are working and why, and then you will want to be alerted to when the markets turn positive. If you had gone to cash, and then you can put money to work in a potentially new bullish phase. Have a great weekend. I'll see you here next week.